Hello everyone, I hope you are doing good today. We are in the third chapter, in the third part of this course. So I'm going to share with you the secret that nobody told me, but I have to discover it by myself when practicing Forex trading. So by the time of practicing Forex market, I learned a lot of things. One of the most important that I named in this course, the secret. This is my own secret for Forex scalping, which is that's what we are going to study in this chapter. But before we start this chapter, I want to remember you the plan, the strategy plan. So the secret that I will show you in this chapter is situating here. So you have to apply it as it is in this strategy plan. Okay, so you have to go first with the first step and the second step to the third step and finish with the secret. So you have to do it as it is in this strategy plan, okay? Because the common mistake that traders are doing is to focus on short term and forgetting bigger time frames. I don't want you to apply this directly when you open up your trading platform, okay? So I want you guys to learn and master this strategy plan and do it step by step, okay? You have to, in the first time, the major currency, the major support and resistance, then identify the trend direction, then goes here to confirm if the market is in trending or in correcting market, and waiting for good configurations and apply the secret that I will show you in this chapter, okay? I'm telling you in advance that if you open up your trading platform and keep applying this secret, this will be very dangerous for your capital and trading performance. So you have to go step by step. That's it. That's the point that I want you guys to understand before we begin, okay? So let's go to the secret. Theoretical part of the secret. I will share with you the secret that nobody has told me before, even in my $4,000 masterclass mentor. I discovered it by myself when practicing and mastering Forex market. So these are the currency pairs that I'm working with in Forex trading. The first currency pair is Euro USD. The second is Euro GPY. The third currency is GBP USD. The fourth one is GBP GPY, and the last one is USD GPY. As I already told you in previous chapters that I am not trading USD GPY, okay? We are going to see why in this chapter, okay? I advise you also to not trade USD GPY. We are going to see why, and I will prove you the reason why I'm not trading USD GPY. I classed the above pairs to families based on the base currency, okay? So currency pairs families. This is how I classed the currency pairs by families. We have here Euro family and the GBP family, and we have here the USD GPY. It's a common pair, okay? So the USD GPY is contained in the Euro family and also in the GBP family, okay? So the family contains three currency pairs. So we can retrace that. So we can retrace that. So the Euro family is this, and the GBP, let me change the color, the GBP family is this, okay? So the USD GPY is a common currency. This is how I classed the families, and we are going to see why I did this. So let's see the next slide. Let me illustrate you that with probabilities and some simple maths. So GBP USD and GBP GPY it equal to USD GPY. I will tell you why. Okay, let's do some maths. What is the common currency in this pair? We have here GBP, we have here USD, we have here GBP, we have here GPY. So the common currency is the GBP. So if we delete the GBP in this probability equation, we are going to have USD and just GPY. So the equation is GBP USD divided by GBP GPY it equal to USD GPY. We can see this also in the Euro USD. So Euro USD divided by Euro GPY it equal to USD GPY. Let's delete the common currency here, which is the euro. When we delete that, we are going to have just the USD and the GPY, which is the USD GPY. Okay, and the same case here in this equation. Okay, GBP GPY USD GPY, the common currency is the GPY. When we delete the GPY, we are going to have GBP USD in this equation. It's the same case for this and this. This is just some maths. We are going to see why I'm doing this later in this slide. So with this simple math, we proven that the above currency pairs in a family of pairs are interconnected between them. So these pairs in a family, because this is a family in this equation, it's the whole family that we saw earlier in this chapter. Okay, this is the family. GBP USD GPY GBP GPY and USD GPY, which is this family. The Euro USD or Euro GPY USD GPY, which is this family. Currency pairs in a family of pairs are interconnected between them, which we proven with some mathematics. I will prove you that after in real chart. Note, USD GPY is included in both Euro and GPY families. You have to take it in consideration. You have to take in consideration this note. Okay, we saw it earlier also. I told you that the USD GPY is contained in the Euro family and also contained in the GBP family. So the USD GPY is common currency. Okay, so I hope you guys understand very good these equations. If you guys have any question or did not understand this, I will reply to you. I will try to explain you more until you understand this concept very good, because it's very important for your trading. This will affect your trading performance when you apply in this secret as I'm teaching it for you. Okay, let's see the next slide. Okay, let's do now some probabilities. Let's see legend first. When you see a green up arrow, it means that the pair is strengthening. When you see double green arrows up, pair is moving up strongly, and vice versa for red down arrow. If we have an Euro USD strengthening up and we have USD GPY strengthening up, then we have an Euro GPY which is moving up strongly. If you want to trade the Euro GPY, you have to confirm that the USD GPY is up and the Euro USD is trending up. For example, if you have a good configuration, when you analyze all your the market, doing support and resistance, technical analysis, price action, candlestick pattern, and you have a perfect configuration. For example, in Euro GPY, okay, you have to confirm that the USD GPY and the Euro USD is synchronized to the Euro USD. Let's see the second case. If the GBP USD is weakening and USD GPY is weakening, then we have a GBP GPY which is in a strong down movement. If we have Euro GPY weakening and USD GPY strengthening, then we have Euro USD in a strong down movement. If we have GBP GPY strengthening up and USD GPY weakening down, then we have GBP USD in a strong up movement. With this secret, you will have all the odds to your side and catch lower risk, high reward trades. In this part, I am going to show you just theoretical part. In the second part, we are going to see that and apply that in a real chart to confirm and prove this secret, because when I discovered this and I'm using this secret always in my trading, I have seen a perfect performances. Okay, so let's see the next slide. I know that is kind of difficult to understand that, but it's worth it. You will see that in the real chart and the trade opportunities that you will have when applying this method. Okay, takeaways. For example, you have a perfect trade configuration on Euro USD. You have to confirm if the Euro GPY and the USD GPY are synchronized to the Euro USD. Use the previous pair probability table to help you. The second one, you need to have at least two pairs synchronized and the third one ranging to have a good movement. To have a perfect movement, you need to have the three pairs of a family synchronized. Let's take an example on this one. For example, you have a perfect configuration in chart for the Euro GPY currency pair. You see that chart is doing is trending up and the lower low are higher than the previous lower low, which is the characteristic of uptrend, and you have a perfect pullback. It's a good configurations to go buyer on Euro GPY. For example, if the USD GPY is trending up and the Euro USD is ranging or is doing nothing, it's choppy, it's good. You will have a good movement, for example, like this, good movement like this. But the perfect trade is when you see the three currency pairs of the family are synchronized. You will have movements like this, short pullback, and this short pullback, and you will have a perfect opportunity to trade with less risk and high reward. I did this table for you guys to help you to better understand and use the concept that I explained in this chapter. In this table, I just did the perfect trade rules. In this table, you don't have to change anything. Just in this, you have just to edit these numbers. Let me introduce for you this table first. So in this column, we have pairs to trade. For example, you want to trade Euro GPY, okay, and the direction of Euro GPY is trending down, so you have to set -1 here. Okay, the Euro GPY direction is trending down. In this second part of this table, we have a confirmation pair. USD GPY must be in a downtrend also, at least at lower time frame, like 5 minute, 1 minute, or 150 ticks. And confirmation pair number 2 must be at the down direction also to have a perfect trade entry on Euro GPY. Okay, so note, you can't set all the pairs to trade in down direction, else the table will have mistakes. So in this column, F column, if you set all this to 1, that means the direction is up like this, the table is correct. But when you do this, -1, -1, -1, -1, the table will change entirely. I advise you do not do that, because you will have here false suggestions, false rules. Okay, at least you have to set 1 here. Okay, and the table will be good, and it will give you the perfect rules. That's it. So for example, you analyze the market and you find a good trade opportunity on GBP USD in up direction. You go here and set 1 to change the direction of the GBP USD, and he automatically gives you the rules. Okay, he will suggest you to confirm that the GBP GPY is up at least in lower time frames, and the USD GPY in downtrend at least in lower time frames, like 5 minutes, 300 ticks or 115 ticks. So I hope guys understand very good the chapter of today. If you have any issue, don't hesitate to contact me. I will assist you at any time. In the practical part, you will better understand these concepts that we developed in this chapter. So see you guys in the next chapter.